Tuesday, January 2nd, 2024, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at Britain's economy and what, in my opinion, would be the long-term solution to Britain's economic woes. We're going to look at as well at the FT, their reporting on what they call the grey gloom for the UK economy. Yes, they have their solutions. I personally think they're short-termist ones and not really beneficial in the long term. And recently, actually, I wrote an article for a magazine in the northeast of England called the Tyne Valley Express. And that's what I wrote about, Britain's economic woes and what is the solution for Britain's economic woes. So we're going to go through the article and you're going to get the article before it's published. Actually, it's going to be published in a week's time on the Tyne Valley Express, which is a small magazine up in the northeast of England. So that's what we'll do today. Before I go further, just wanted to ask you, if you're new to the channel, to make sure you subscribe to the channel, hit the notification bell to be notified of all my new videos. I publish videos every day, and I'm doing a lot more interviews as well with other people, people that are quite popular, I would say, like Doug Casey and others. And if you do have a suggestion or someone that you'd like to hear me interview, make sure you write it down in the comment section. And also in the description of this video, there are ways, you can find ways in which you can help support the channel. So I can dedicate 100%, well, virtually 100% of my time to hopefully making content that is interesting for you. And I would say today's topic doesn't just apply for Britain and the UK economy. It applies to, I would say, every country around the world, really. So first of all, let's look at what the FT is saying. FT is saying UK economy will enter grey gloom until polling day. Economists say lower inflation will result in little perceptible improvement to living standards as growth stagnates in 2024. The FT's annual survey predicts. FT Economist Survey. Anemic economy needs investment. Well, pardon my French. No shit, Sherlock. But it's easy to say that. But how do you get investment? And that's what I'm going to try to tell you, the way I think it should be done. And over the years, I've gotten comments saying, well, you're too negative. The UK economy hasn't collapsed. But I've been talking about it. I have a playlist called the UK Economic Collapse 2021 and beyond. I've spoken about the UK debt time bomb. I've got a playlist for that as well. So to me, it's not a surprise that the economy is not looking great. And as the FT says, it's gloomy. So let's go through my article then. It's not a long one. And yeah, it will show you what I think really should be done. And most probably won't, because I am the home of alternative economics and contrarian views. And unfortunately, the great majority of people out there are asleep. They don't have time to study economics, even though it's not that hard, really. If you study the Austrian School of Economics, anyone can do it. But many people think that economics is something that you have to learn at the Gaddafi endowed London School of Economics or Oxford and get a PhD, or Cambridge or Harvard or Yale. But anyway, the title of my article actually, and I wrote this while I was still in Switzerland because I had a deadline. So it's way before this article in the FT. So, what is the solution for Britain's economic woes? And of course, investment is important, but how do you get the investment? Hopefully, you understand after I go through this. So, many blame Brexit for the current economic malaise the UK finds itself in, and that if we elect a new party, Labour, to power, that they will be able to turn things around. Unfortunately, things are not as simple. And my point here is not to pick a party over another, but to look at what, in my opinion, are the root causes of the current economic depression permeating through British society. Yes, it is a depression. You can use the equations the Keynesians use and say we're not even in a recession. But have you been out there, outside the Westminster bubble or the central London bubble? Yeah, I would recommend you do. On the surface, things don't look that bad. One might argue as GDP growth was only slightly negative in the third quarter of 2023, and inflation as measured by the CPI dropped below 4% in November. So what we'll look at in this article are the macro problems looming over the economy. So the major problem, in my opinion, is our monetary system, which has been one solely based on a debt-based currency since the outbreak of World War I in 1914. Prior to the Great War, the monetary system had a solid anchor of gold, which made sure credit creation and government spending were kept in check. From 1821, when Britain went back to the gold standard after the end of the Napoleonic Wars, until 1914, inflation as measured by the CPI averaged minus 0.1% per annum, which means the currency was stable or even gaining value. And you can get that data from the Bank of England inflation calculator, just to let you know. A stable currency encouraged savings and investments, which created a virtuous circle whereby industrialization boomed, new jobs were created, and where an increasing standard of living led to more savings, and so on. So yeah, this is what I'm talking about. We can't have a boom in investment right now if savers are punished by higher taxes, by negative real interest rates. It's impossible. The gold standard also limited the amount of government that government could borrow and spend. Yes, government is crowding out the private sector, and that's why we don't have investment. But you probably won't hear anyone in the mainstream talk about that, though, that you need small government. Taxation was also kept low, as raising taxes during peacetime is never popular. Yes, taxes were raised back in the Napoleonic Wars, but after the war finished, it was pared back. Government spending was pared back. Now it just seems like it just keeps going on and on and on. So what happened after 1914, and why have we been going down the road to ruin ever since? I would say that the major culprit is the fact that Britain, with the exception of the period between 1925 and 1931, never went back to a sound money system or gold standard. So that period there was actually when Winston Churchill was the chancellor, and he took the country back on the gold standard. But he used the pre-World War I rate, which was the wrong one, because the government had borrowed a lot of money, had printed a lot of money, so he should have devalued the currency versus gold, and he didn't, and that created a lot of problems. During the Napoleonic Wars, Britain did go off gold via the Bank Restriction Act of 1797, but in 1821, gold convertibility of the currency was readopted, and that was the reason why inflation was inexistent until 1914. The fiat currency regime that the UK has been under since 1914 has led to an explosion in inflation, government spending, debt, and also inequality. Yes, there was inequality in the 19th century, and it wasn't great. You've heard of all the Keynesian stories and novels, Oliver Twist and all that, but things did improve towards the end of the 19th century. People were a lot better off than in the beginning. Now it's the other way around. We're going from people being fairly well off in the beginning of the 20th century, and now it's all going downhill. There's a lot of inequality. According to the Bank of England CPI, or inflation calculator, inflation has averaged 4.2% per annum since 1914. And I put in brackets here, the number is probably higher as ONS changed the methodology for CPI. Going back to 1949 in May of 2022, so they do tinker with the CPI. So that's much. It doesn't seem like much, 4.2%, but over 100 years, every year it compounds, and it's a lot higher, of course, than minus 0.1. The century plus period of inflation has made sure the national debt has ballooned, and it has also made it easier for government to inflate away the debt at the expense of regular workers, savers, and pensioners. So if you inflate the currency away and you punish savers, how are they going to invest? No, they're going to struggle to survive. They won't be able to save anymore or more and invest. Prior to the Great War, government spending rarely reached 10% of GDP, while since the 1950s, it has always been over 30%, and at present is over 50%. The last 15 years, or in the years following the crisis of 2008, have accentuated this trend as the government and the Bank of England have ramped up government spending, and the creation of fiat currency and credit is one of the major reasons why, in my opinion, we are now seeing the cost of living crisis, social unrest, increasing wealth inequality, and the deterioration of the economy in general. Brexit or party politics are just distractions to the greater problem of inflation. Inflation always hurts the most vulnerable, like the poor, pensioners, and young people the most, as they are the last in line to the funny money created by government and the central bank. We're almost over here. Bear with me. The other problem with inflation and big government is not just about big business benefiting from big government contracts, but also that many have become dependent on the bloated welfare state. In order to placate the masses, the current system of politics keeps rotating from a business-friendly Tories to social welfare-friendly Labour. And with access to easy money, the system just keeps getting bigger, while those in the middle, or the middle class, keep getting squeezed. This system has become so entrenched that if one tries to change it by either cutting the cozy relationship between big business and government, or the cozy relationship between government and the welfare state, we would see major social unrest. There you go. That's why my message is not that popular, but hopefully people will become more aware of it. Both big business and welfare recipients expect Peter to pay Paul, so to speak. The current problems have been brewing for many years, and while we get a change of political tack every 10 or 15 years or so, it seems that the economy keeps getting mired in a cycle of ups and downs and barely ever produces the growth and prosperity needed to make sure people become better off and that wealth inequality shrinks. So how do we as a nation get out of this economic predicament? I would like to say that my proposal does not guarantee utopia, as I think humans are imperfect. And so we always face difficulties. But I think that after over a century of inflation and big government, the opposite, no inflation and small government, could be the first step to a more prosperous economy. So, to conclude, how would the change be implemented? Well, politically, it seems to me that it is almost an impossibility. And it's because, as the old saying goes, turkeys would never vote for Christmas. I would say that there are two other ways. The first one is more gradual, and it is the route of making people aware or educating them about what I have just written above, while the second would be a more sudden and harsher denouement in the shape of a total currency or economic collapse, which hopefully would wake people up to the fact that, as Frederick Bastiat once said, and I quote, "The state is the great fictitious entity by which everyone seeks to live at the expense of everyone else." So there you go. Yes, the country does need investment, but it's easy to say it. I think the solution to the problems we have are, it won't be an overnight solution. It just has to be a change of mentality. And who is Frederick Bastiat, for those of you who don't know? Well, he wrote the book The Law, and I highly recommend it as well. He was a French statesman and economist back in the first half of the 19th century. And I'll put a free PDF to his book. It's not long and it's really interesting to read. I'll put that below in the description too. So let's go and check the markets. First day of the year, and see where things are. It's 8:30 a.m. London time. We've got spot gold at 2,073. It's up about $10. The high's been 2,077. The low has been 62. Silver has traded up as high as 24.10. We're now at 24.00. It's up about 20 cents. So a fairly good start to the metals here, precious metals. The Dow futures is up 120 points. The NASDAQ is up 29 and the S&P is up 14. To the currencies, we got sterling up 0.2%, 127.45. The euro is down about 0.2 at 110.27. The dollar is up 1/3% versus the yen, 141.40. And the dollar is up slightly versus the yuan at 713.70. And let's look at the Swiss franc, because I think we need to keep an eye on this. The dollar has been dropping quite sharply against the Swiss franc. Today, though, it's up 0.5% at 84.50. To the other currencies, we got the Aussie dollar up 0.25%, 68.28. We've got the dollar unchanged versus the Canadian dollar, 132.40. And the Kiwi dollar is down 0.33% at 63.05. To the commodities, WTI crude is up 1%, 72.56. Brent is up 1.2%, trading around 78. And platinum is down $1, trading at 990. And high-grade copper is unchanged, trading around 3.9 or 390. And let's finish off with the bond market. Let's check the 10-year yield. Well, 10-year yield is up 8 basis points, actually, at 394. So not a very good start to the year for the bond market. I see that the 2-year is up 5 basis points, which means that people are selling bonds and prices are going down and yields are going up. So with that, I'm going to wish you all a very good day. Take care. Bye.